Martedì mattina sul floor del New York Stock Exchange, ben ritrovati. Quest'oggi vediamo gli indici ancora intorno alla parità, volumi di scambio ancora decisamente sottili, un'altra seduta del mese di agosto. Ne parliamo con il mio ospite qui sul floor che è Mark Otto, Designated Market Makers per Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So Mark, another August day, volumes are still very light. We are very close to the closing level from yesterday. What is moving the market today?
Well, moving. We're up 20 points right now. We had some macroeconomic data out of Europe and here in the U.S. as well. It seems as though the macro data out of Europe was for the most part bearish. If anything was a bright spot, it was the flash GDP numbers that came out of Germany and France. So apparently they were a bit better for the flash GDPs. However, here in the U.S., the retail sales numbers came out, and they were much better than anticipated, 0.8% versus 0.3%. So those are the best numbers since February. So 2/3 of the U.S. economy is consumer spending. So that's definitely a bright spot. And one headline that caught my eye is that Home Depot actually raised their forecast going forward. So they're a bit optimistic that home sales will improve.
Yeah, because it's linked to the housing sectors too. Yeah.
Absolutely. Pre-existing homes, a lot of people like to improve them before they put them up for sale. So it definitely would help them.
And now I was saying that the volumes are very light. Yesterday we saw the lowest volume since at least 2008. Talking about, of course, non-holiday sessions. The VIX down, no volatility whatsoever. I think it was the lowest level in 5 years as well. So people here are waiting. They are just sitting on the sidelines waiting for the big events coming up, August, September.
Yeah, we're definitely, summer's here. You could see it in the volumes. A lot of people are on vacation. People sort of sitting on the sidelines, and they are waiting. On the radar, people are talking about Jackson Hole. Most traders that I speak to are anticipating the fact that the Fed will probably come out and say something to the effect of, we're ready and waiting in case we're needed. We'll be there type thing is the same rhetoric we've actually been hearing over and over. A lot of people don't really anticipate them to do anything until the September 13th Fed meeting. So more and more people are anticipating the fact that they are going to actually put in play QE3 at that point in time, right at the doorstep of the election. So that there'll be a bit of controversy over that, I'm sure.
Yeah, and especially because let's remind that Jackson Hole meeting is exactly between the two conventions. So, of course, it's going to be really a mix of politics and policy.
Oh, it'll be fun to watch. It's definitely timing is everything, and it seems as though the stars are aligning for that. So there'll be plenty to talk about by that point in time. For now, it just seems as though everyone's on the sidelines sort of watching things. You could see the S&P is sort of, it crested above that 1,400 level, and we've been sort of sitting here. If the trend continues, it seems as though the overall trend is higher. On pullbacks, it does seem that as though people are optimistic for stimulus. So we've seen a lot of bad news is good news simply because people are thinking that it's going to push governments around the world closer and closer to actually putting in place some sort of stimulus. So as long as that extends through Jackson Hole and possibly until September 13th, we could potentially see the markets actually climb higher from here. It seems as though 1,400 for the short term has been the support level that even though on pullbacks, it keeps reverting back to. So
it's a kind of like support and resistance at the same time, right?
It's definitely that psychological point. So that's got to come into play.
Now, a brief comment, you was just saying that bad news are igniting the expectation of an intervention. And the good example is China. Well, we saw the GDP in Japan that really disappointed, but in China, more and more economists are revising down again the estimates of the GDP. Last one was yesterday. Bank of America expecting a 7.7%, against an 8% that they were calculating earlier. Are you really worried about China, or you really expect an intervention?
Well, China's put in play what they call this fine-tuning process. So since November, we've seen 3 lowerings of the bank lending restrictions. And then we've also seen 2 rate cuts in a very short amount of time. So this fine-tuning process, it seems to be what they want to stick with. They don't want to throw a large amount of money at the situation and start building again like they did in 2008. So I think that they will be successful with it. I think a lot of people are a little bit alarmed since the macroeconomic data out of China it seems to be increasingly getting worse, and they're somewhat anticipating the term to be somewhere in the near future. So most indications are that analysts are expecting at least two more bank lending restrictions being lowered by 50 basis points. Each time they do that, it's $63.5 billion that gets injected into the system in lending power, and at least one more rate cut. So they believe that'll do it. I mean, when you think about it, 7.7% sounds pretty good when you're looking at the rest of the world. However, China has always set their benchmark at 8%, and they've always pretty much come in above 9%. However, most of the analysts I see, like Reuters polls and the larger banks, are all targeting the high sevens. So, high sevens not the worst thing in the world. It seems as though hard impact is off the table. So it seems like it is going to be some varying degree of soft to what I like to call medium impact, perhaps. But obviously, disappointment would be if they land under 7. I think that would be disastrous.
But they still have tools.
Yes.
Contrary to Western economies.
Absolutely, and the thing that's different about China compared to especially particularly like the Eurozone, where you have 17 nations that have to coordinate, or even here in the United States, China when they want to make a play, it can be radical and it can be very fast. So there's no debating; they'll just put measures into place overnight. So I'm not that concerned about China because of that.
Thank you very much, Mark, for being with us.
My pleasure. Thanks.
E grazie a voi per l'attenzione. A domani.